Good evening, everyone. I see Anshulagia from Jaipur, moderator of this webinar. We are delighted to invite you all in this webinar organized by Continuing Professional Education Committee of ICI. It's my pleasure to be a moderator of this webinar, which is covering two topics. The first one is navigating RODTEP, and the second one is corporate social responsibility. For this, we have two speakers, CA Charmi Atul Shah and CMA Yash Deepak Bhai Shah. Before going forward, I want to apprise you about our CP committee. CP committee, Continuing Professional Education Committee of ICI. In today's environment, our professional has acquired an indispensable position in the business and economy. The CP committee of ICI has continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with like excellence in services. So, in this direction, CP committee always been proactive to meet the emerging needs of its member to enable them to meet out the to face the challenges coming from the market. So going forward, first I would like to invite the Vice Chairman of CP Committee, CA Vishnu Agrawal sir. Vishnu Agrawal sir is Central Council member right now and is Vice Chairman of CP Committee and Directors Committee. He is the expert of he is an expertise and experience of more than 2 decades, and he has taking sessions in income tax matters. He has authored also a book on landmark judgment of income tax. So I would like to invite Vishnu Agrawal sir for his opening remarks. Sir, please.
Thank you. Yes. Warm welcome to all my both of the speaker and my office from Ajitna Tiwari ji and all my participants today present in the webinar. Friends, at the CP committee, we are doing day and night hard working for our professional brothers how to enhance their practice. Friends, every Wednesday and Friday, we are doing one webinar. In all the webinars, we are inviting four our speakers. Every webinar, we are inviting two speakers from across the country. Top of the topmost speaker we are inviting. And more than 1,000 chartered accountant always take the benefit of these webinars. Friends, at the CP committee, we are also coming out with the real-time CP concept from in next couple of the months, and I'm also vice chairman of the direct tax committee. And today, friends, I'm happy to share that our new finance bill 2025 is a selection committee has passed, and our institute has given uh, close suggestion to the selection committee, and more than 100 plus suggestions is accepted by the selection committee of the institute chartered accountant institute. We have given. Friends, apart from the uh, finance bill, we are also coming out with the revised guidance note of the section 44 AB tax audit, and revised guidance note is in the public domain for the exposure draft. Friends, if you please read out each and every line of the exposure draft, and if you have any suggestion, please give the suggestion. And also we are coming out with the checklist of the ITR forms 1 to 7, because lot of changes this time the CBTT has made in the ITR forms. Friends, apart from the checklist of the ITR and guidance note, we are also coming with the one mobile app under the direct tax committee, in which each and every case law, each and every forms you can available on the one click of the mobile app. Friends, we the networking guidelines of also is the public domain, because without networking our practice cannot be grow. So our we have liberalized our networking guidelines at our council level, and all the networking guidelines in the public domain. So I request each one of you kindly read the networking guidelines also and give your input and suggestions. Friends, the new format for the non-corporate SSC. This time the council has revised the format and compulsory for each and every SSC. So my request to each and every chartered accountant, please follow the new format for the financial reporting in this particular year. Friends, I will not take much of the time. because our both of the speakers are learned speakers, and today is the webinar, and most of the our chartered accountants participants are waiting for here to both of the speakers. So my best wishes for this particular webinar and the happy learning for this webinar. Thank you, friends.
Thank you, Vishnu sir. So, without wasting much more time, we should start with our first session, navigating road trip. In last 10 years, India economy is majorly dependent on exports. And for promoting exports, Indian government has launched many incentives, foreign trade policies and benefits, GST refunds, etc., etc. So it's a very new area for our professionals to just check and perform there. Income tax, GST, and all indirect taxation benefits, all the areas are very old and just came in the traditional practice. But for young practitioners like me, this is the new area where government is also supporting the professional as well as the exporters. So we for this topic, navigating road tape, we have a speaker, CA Yash Deepak Bhai Shah for Ahmedabad. He has more than 4 years of experience in indirect tax and compliances. He has many diplomas in international taxation and foreign trade policy and forensic audits. And he has delivered many sessions on IC platform and other platforms in relation to finance, taxation, or export policies. So, going forward, I would like to invite CAS Deepak Shah for his session. Yes, sir, please.
Thank you so much, Anshul Bhai, for that kind introduction. Thank you so much, Vishnu sir, for giving that brief background and setting the right tone for this session today. And what CP committee is doing is tremendous job, having two sessions weekly. My compliments to you, sir. In his absentia, Chairman sir, thank you for this wonderful opportunity. So, directly jumping to the subject on which we are all there together to learn today, that is on RODTEP. Hope my screen is visible.
Visible, sir.
Thank you. So, today we are going to see one of the schemes which is very recent, very new, and as professionals, we should definitely be seeing our clients' value addition which we can do in our regular consultancy advisory. And we must ensure that whatever we do for our clients, we have that value addition done in each of the transactions, reviewing that transactions and suggesting something which generally without the professional support we miss it. So, going by that, let me give a brief background. Before coming to this scheme, there is a new foreign trade policy which has come up in the year 2023. So, from 1st April, we are seeing this foreign trade policy into effect. Multiple extensions to the earlier policy, that is FTP 2015 to 2020. And there was a dire need for a new foreign trade policy which helps the professionals and business owners who are into this business of import export of goods or services and help them get more and more benefits, incentives, duties being lessened. And one of the great steps in this journey is government is trying to switch its platform from incentivizing to remission of duties. So, what scheme we are going to learn today or discuss today is in terms of RODTEP scheme, where the remission of duties which are left pending or which are not being credited have been given an option for refund along with the export condition which all the business owners needs to fulfill. So, by giving this brief background, let me now just go to the subject topic because I have been allocated 1 hour for this session today, and we want to utilize this 1 hour fully onto this aspect of What is this scheme all about? What are the compliances? What is that thing which we need to adhere to in terms of getting this beneficial scheme for all our business owners? So, what is the background of this scheme? Let me just spend some time over here where the scheme was generated or which was come out as a part of a exercise which the dispute settlement body had ruled out that one of our earlier schemes, that is merchant export from India schemes, which we call MEI scheme, violated some of the global trade norms which were inconsistent with the SCM agreement, which is subsidy and countervailing measurements. And because of that, India was something which a party to it, and hence this dispute settlement body raised a question on this MEI scheme, which used to be in operation before this scheme coming into picture, that is RODTEP scheme. And as a part of that violation, India was mandated not to enjoy the special or differential treatment which other countries were eligible for that under the WTO guidelines, that is World Trade Organizations, and hence MEI scheme was to be phased out, and a new scheme called as RODTEP scheme, that is remission of duties and taxes on exported products, came in effect from 1st January 2021, and which is also considered to be one of the compliant schemes under the WTO norms, as the purpose of the scheme is to give a rebate in terms of taxes or duties which are remaining unrefunded, and also to promote or incentivize the export, as rightly mentioned by Anshul Bhai, where the economy is going in this journey of export, and Indian economy is basically thriving to do more and more exports by each day going pass by. It is very important for us to analyze this scheme as to how this scheme can be made a beneficial part for all our transactions that are we structuring for our clients. So the background of this scheme is through Ministry of Finance. A press release was issued on 31st of December 2020, in which the exporters were being instructed that they have to declare their intention to claim this RODTEP scheme in their shipping bill by selecting a flag which is a Y flag in the information code. The scheme lacked the procedures, the rates for which the rebate would be available, and the guidelines on how the scheme would be implemented. The basic structure in terms of the scheme, the operational part of it was ready by 31st of December. A press release was also issued that the persons who are willing to claim this scheme need to get their shipping bill, which is a primary document while exporting the goods, to select a particular option while filing that shipping bill on the iState portal. The scheme, which was launched in the year at the end of 2020, it took 8 long months for the ministry to finally come out with the guidelines by way of a notification, which is notification number 19 by FTP 1520, which was dated 17th of August 2021. So the scheme was thought about it, and we brought out this scheme as a part of a gradual process, where if I see MEI scheme, which was more of an incentive oriented scheme where we used to promote exporters for doing exports from India, and as a part of incentive, we were used to give a script per se based on that export. On other hand, RODTEP scheme forms part of a remission or a duty exemption in terms of a rebate kind of thing, which is also governed by new FTP under Chapter 4. So FTP 2023, which started in the year 2023, jot out a full chapter on this where all the duty exemptions and remissions were made part of this chapter, and the scheme was made available to the public at large. As I mentioned you earlier, MEIS was a scheme which was in violation to the WTO agreement, and hence India had to phase out that MEIS scheme which was operational prior to this RODTEP scheme. And in turn, RODTEP being a new scheme, they brought out this with the objective of neutralizing the tax and duties which were suffering on the exported goods, which were otherwise not credited or remitted or refunded in any manner. So the idea behind this scheme was to give a rebate or was to give a exemption sort of remission of duty wherein otherwise the same tax or duty were not either creditable in terms of further payment of tax or remitted or was refunded in any manner. Going by its objective, the refund or rebate in RODTEP scheme was preliminary with respect to central level taxes, whether GST or other taxes, which the taxpayer bonds on the product which is exported prior to the stage of that export, either in terms of transportation, production, or even usage of those goods in the production of such exported products. And hence, such indirect taxes or duties were liable to be refunded in terms of this scheme. Now, as the purpose or the objective of this scheme is only with respect to taxes or duties which are remaining unrefunded, if there are some taxes or duties which has borne exemption or remission or credited in terms of further utilization, the rebate under this scheme will not come into picture. We'll be discussing this in greater detail once we come what are those which are made part of it, this rebate scheme, and which are those taxes or duties which are outside. Now, the benefit is available to all the exporters. There is no restriction in terms of whether they are manufacturer or trader. Also, there is no turnover limit criteria for getting or claiming this benefit under the scheme. As we mentioned it clearly previously also, whenever I am exporting the goods, I need to select an option for availing this scheme at the time of filing the shipping bill. So, one of the great benefits of this scheme is you need not be a manufacturer or actual producer of that goods. Also, even if you are a one time exporter, two-time exporter, there is no restriction on you to claim this rebate under this scheme, basically saying that there is no turnover criteria for being part of this scheme. Now, let me go into more depth of this subject. So, where does this scheme come from? What is the legal framework in which this scheme operates? So, as I mentioned, this new FTP, which was started in 2023, it has a chapter on duty exemptions and remissions in form of chapter 4, where there are 10 paras which are allocated to this scheme or RODTEP scheme, which covers various aspects like its objectives, principles, the supplies will be which will be eligible and which will not be. Along with that legal framework, we also have a notification which was issued, which talks about the manner in which that rebate or duty credit, which we generally call scripts or scrolls, will be generated in terms of this scheme, along with a dedicated section under the Customs Act, which is Section 51B. Also, CBIC came out with a detailed circular number 23 by 2021, which talks about the generation of scroll and its usage, what would be the further usage which these scrolls or scripts will be eligible for. For getting into the procedural part of it, on the electronic portal, a detailed advisory was issued on 16th of August 2024 to make sure that the scripts which were made available in RODTEP through IceGate portal are being clearly given a step-by-step process so that the exporters can manage it on their own or either through the portal guidelines on how these scripts will be generated, managed, and utilized for further duties. So, one of the very important criteria of these schemes or usage of these schemes is the scripts which are generated based on the rebate or the scheme can be used for payment of basic customs duty while you are importing the goods. So these scripts are basically nothing but will be acting as a credit or payment mechanism for future imports in terms of that exported products which we have already done. A very detailed FAQ was also released by DGFT, which provide a detailed guideline on very recent annual ROTAP return. So we'll spend some time onto this return because this is something which has been issued recently and we need to fulfill that return or compliances that needs to be done by that ROTAP claimers. So whoever is claiming the rebate under the scheme need to file an annual return called ROTAP annual return, that is ARR. I have also tried to cover this at a greater detail in my later part of my presentation. Now, the legal framework worked from starting from FTP. So, very importantly, the scheme, which is a remission scheme, chapter 4 specifically jot down the objectives and the criteria for which you will be eligible for this rebate. So, taxes, duties, or any levies in terms of central, state, or local level which remain unrefunded are eligible for rebate under this scheme. So, how does this scheme work? Now, the next question. So, we are very clear now on the aspects of objectives, purpose of this scheme, how this scheme will operate. Now, what are the percentage or the nature or the extent of rebate that we will get under this scheme is something which we all be having in our mind. So for each financial year, this is a budgetary framework, so it will operate in terms of a notified rate as a percentage of an FOB value. Now this is very important. Whatever goods I export outside India, the FOB value, that is free on board value, a certain percentage of that FOB value you will be eligible for rebate subject to a condition of cap on per unit of that exported product. So the percentage will be notified. Along with that percentage of rebate, you will be also notified about the cap per unit that you will be eligible apart from that percentage is concerned. Make sure, friends, that this is based on the FOB value So any percentage that the government notifies will be applicable on my FOB value, and I will be eligible based on that FOB value that I declare during the shipping bill. I have covered at a later part of my presentation the issues which are being faced by the exporters in terms of this, which one of that issues will also cover this. Now, where are these rates or value cap which we discussed above are prescribed? So, there is an appendix which is Appendix 4R in respect of DTA units and 4RE in terms of ACZ and EU units which are already notified by the government. And based on the export functioning of that particular product, the rates will be reviewed on an annual basis. So the product or the nature of that rates will be dependent on how the government wants that product to be promoted, the demand of that product in the country, the domestic demand, and the potential for that product in the exported country. Now, this rebate or this remission or this refund comes with a condition that whatever the sale proceeds out of that export needs to be within the time limit prescribed under FEMA Act, which prescribes a particular time limit for from the exported date to receive the amount in your bank account. Now, if tomorrow say I have not received that amount of that export proceeds which are prescribed under FEMA Act, I am not eligible for this scheme and I may have to return back the rebate which I have claimed during the export of goods. Along with this, I will have to also ensure that proper records are being maintained, and wherever required, department may come and verify that records in terms of physical verification, where based on some risk parameters the verification may be instigated and I may be liable to submit records pertaining to that RODTEP rebate which I have claimed. If they find it appropriate, they will allow us the rebate. If there are some consequences pertaining to that, may be required to return back if we are not fulfilling or non complying with the provisions of the law. So, as I mentioned, there are some input tax or credits or duties which remain unrefunded or which falls under the condition of input tax, which generally is not creditable or generally is not eligible for further payment. So some of the illustrative list I have tried to cover which currently are not eligible when we say there is one nation, one tax in terms of GST. Still, there are lot many taxes which are still not being covered by GST, and hence we are in this situation where there is a blockage of credit on multiple aspects, right from fuels, electricities, municipal taxes, some credits falling under 17(5), works contract services, blocked by 16, stamp duty, excise duty on fuels, transportation, electricity, etc. So this is a basic illustrative list under which remain unrefunded to us, and I am the actual bearer of that taxes when I produce or manufacture a good, and that credit is actually forming part of my cost, and the end customer is actually bearing that tax implication. To simplify that, government came out with this scheme to say that whatever taxes which remain unrefunded or uncredited to you you can claim a rebate under this scheme. Once we saw the eligible taxes or duties which form part of this scheme, this is the time we also see which are the duties which remain uneligible or ineligible in terms of this RODTEP scheme. So these are specifically covered under the FTP para that we discussed, chapter 4, which covers goods which are being imported for export purpose. So there is no value addition per se, and the goods are preliminary not manufactured in India, even though the goods are as it is exported as they are imported. So that would be outside if I'm not making any value addition in respect of that goods, or there is no manufacturing activity on that imported goods, I will be not be eligible for this scheme. Nevertheless, the goods once manufactured in India, even if I am a trader of that goods, I am eligible for this scheme subject to they are not imported. Transshipment exports where our country is only involved as a part of a shipping mechanism. Goods not actually being coming in India or routing through India, it is only through our ports the goods are going, will not be covered. The goods which are subject to export duty or minimum export price are also outside this scheme. The products which are prohibited for export will also be outside and will not be eligible for rebate under this RODTEP schemes. Even the deemed export concept under the GST Act, similar the deemed export in terms of that within the country exports being made to a specified unit will be outside this ambit because this is a physical export oriented scheme where actual exports taking goods outside India is a mandatory criteria. Supplies of products manufactured by DTA to SEZ units will be outside. SEZ, though being considered outside the country, specifically will not be covered under the scheme. Even under the EHTP scheme and BTP scheme, the products which are being manufactured will not be covered. Even the new scheme, which we all call the mover scheme, under the new FTP, where a new section has been inserted under the Customs Act Section 65A, where a bonded warehouse as a concept was launched few years back, will not be covered, and any goods which are manufactured and exported from that mover unit will not qualify for RODTEP. Interestingly, friends, the advance authorization or duty free import authorization along with EU units were outside the ambit of this RODTEP at the initial front. Subsequently, they debarred them. Now, with effect from 1st January 2025, I am repeating, friends, this is a latest change in the law where even exports done against advance authorization in discharge of export obligation or goods being exported by an EUU unit or an SEZ unit will be eligible for RODTEP scheme with effect from 1st to June 2025, where second-hand goods are being taken into use and that being exported would be outside, where the purpose of this scheme is preliminary to promote the goods which are manufactured in the first run and not a subsequent transaction that we would like to cover. Now, let me come to very important and very recent update in this RODTEP scheme, that is this annual RODTEP return, that is ARR. Now let me tell you some few very important aspects which we as professional will be a good opportunity for all of us in terms of our clients, going through our clients, whoever are claiming this RODTEP scheme, This return filing process has been started, and you will be required to file a return. In terms of if I am claiming this scheme, I will be mandated to file this annual return subject to some terms and conditions which we'll be discussing in now. In terms of a claim which an exporter makes in terms of this RODTEP scheme, if it crosses 1 crore in a financial year across all 8-digit HSN. So if he is involved into multi HSN exports, so multiple products which he is being exported, if total RODTEP claim in a financial year exceeds 1 crores, he is liable, he is required to file a annual return by 31st of the subsequent financial year for which such claim has been made. Now, the claim exceeds 1 crore. Now, let me come to a practical scenario where annual RODTEP return for year 23-24 would be filed by 31st March of the subsequent financial year, that is 31st March 2025. So, after the end of financial year, you will get full 1 year to file this return which we have claimed the RODTEP for. Now, this was further extended to 30th of June, for which the AAR can be filed. Even a grace period was allowed till 30th of September for this return to be filed, subject to some financial penalty being levied on. Now, how does this 1 crore rule work? Let me tell you some practical scenarios so that this becomes an easier option for all of us and will give us more clarity. Now, for any individual, so as we discussed above, friends, we have to cover all products which are classified and which exceeds 1 crore. Nevertheless, in terms of this, if any individual product, the claim under RODTEP exceeds 50 lakhs, I am repeating, friends, any individual product bearing a 8-digit HSN code, the claim of rebate under this scheme exceeds 50 lakhs for that particular product, a separate annual RODTEP return is required to be filed for such code. So now it would be dependent on each of such codes how many AARs are to be filed. So it is not a single return preliminary from what we can see. It is based on HSN codes, HS codes that we export. Say for example, I am exporting the my RODTEP claim for a year comes to 1.2 crores. So first condition gets satisfied, my claim exceeds 1 crore and hence I am liable to file a AAR. Now at HSN level, there are 4 HSNs which I am dealing into. Out of 4 HSNs exceeds 50 lakhs limit. Hence, I will need to file a separate ARR for both of such HSNs which exceeds 50 lakh rupees. However, if none of the 8-digit HSN code crosses 50 lakhs, so in turn, I have a 10 products. All 10 products combined adds to 1 crore and not a single HSN code claim of RODTEP crosses 50 lakhs, I have to file a single ARR for which I have claimed the highest amount of claim. So if my total RODTEP claim is 1.2 crores, consisting of 4 HSNs, the highest which comes to HSN 3 in our case, and I have to file a single AR with respect to that HS score. Now, let me come. This was the preliminary background, the criteria under which this scheme operates. So, the criteria under which I am liable or I am made liable for this. Now, say for instance, this will be very important, and we'll have to evaluate in terms of this criteria where I am fulfilling the conditions in terms of claim of rebate. However, I am not filing the annual returns. If I am not filing that annual returns, the consequences will be I will be denied the benefit of RODTEP under this scheme, where further scrolls will not be generated, and a composition fee of 10,000 for a grace period of 3 months would be levied, and later on a composition fee of 20,000 will be levied in addition to 3 months if that is not being fulfilled with the criteria. Now, in terms of this annual ROTEP return, the records that I need to maintain has to be for 5 years. So whatever records which are relevant and important for substantiating this claim under ROTEP, I have to be mandatorily be made available for 5 years for any detailed scrutiny or assessment at later part of this ROTEP scheme is considered for the department to verify and assess. So the purpose of these annual returns is basically to assess the nature of products being exported, get it into diligence of it, present the roadmap revision rate. So as I mentioned, every product has been assigned a rate under this scheme, and based on that assessment, based on the return being filed, a revision may also be required. Also, wherever the exporters are highly risk oriented, that may act as a secondary condition in terms of assessment being done, whether the rebate, whether this scroll being generated is valid or not. In case that rebate or script is found to be in violation to the rules, he may be made liable to refund or surrender any excess claim which he has already received. In terms of calculation of these taxes or duties, we have to make sure that that analogy is very well adopted, where the taxes or duties which are remaining unrefunded is only claim, and it is not uh, getting into the criteria of ineligible set of taxes or duties. In terms where these returns are being filed, the products in nature of which this rebate is claimed will also be identified through these returns being fulfilled. So as I mentioned you friends, that what are the principles that I need to make sure that is there in my mind before filing of this return are that the taxes or duties should not have been under the exempted criteria or may be refundable under any other scheme. In terms of costs which are directly attributable and in proportionate to the exported product, indirect cost or administrative cost will not be form part of this return. So cost should be directly attributable to the product which we are exported. Any indirect cost in nature of that should not be forming part, and I will not be eligible for rebate or refund of that under this scheme. So as I mentioned, this all list we have already discussed earlier in terms of raw materials, consumables, or spares which are being procured for manufacture of exported products will be covered. Nonetheless, the other part of it is where I have to make sure that that is not coming under the criteria of ineligible credits. Now, let me spend some time here, which is a new return which is launched by DGFT, where this return would be based on some particular aspects of the exported products, and I need to make sure that the correct information goes through this return. So this annual return for me, I tried to see, but it seems very complex as it contains more than 25 fields which needs to be filled while filing this return. So maybe government may see and seek that if this can be more simplified in terms of a simple form where uh, criteria in terms of this scheme are fulfilled or not can be evaluated. I will not go into each of these details. These are all available on the online platform. But just to make sure that some of the important details are covered, I will go through this form uh, in terms of what does it talk about. So it starts with the basic details of the exporter, the manufacturer, the unit type, the PAN number, IEC code, the address, and the period of export which we are filing this return for. Very important, friends, is the serial number 4, where the HSN codes for which we are claiming this RODTEP scheme has to be mentioned very clearly. So this scheme operates based on the HS codes defined under the customs tariff. And if any HS code crosses the threshold of 50 lakhs, a single return needs to be filed in terms of this AR, and I need to specifically have separate ARs for each of such crossing of 50 lakhs. Another important aspects which covers on the basic aspect of that is quantity codes which prescribe the unit of measurement of a product either in terms of units or kgs or even a separate liter or liquid products will also be covered. So initially it starts with the export of goods, the value of product being exported, the quantity of products being exported, what costs are covered in this export, the product being exported, what are the costs which are incurred, which are not eligible for refund or exemption under any other scheme. I need to make sure that that cost is made part of this return. So along with the table number and reference, there is also an instructions which are already being available at the right side of it, which will clarify some of the doubts which may arise in terms of that product being exported. Similarly, as I mentioned you, till a particular table, we have this specific costs being incurred on the product being exported, made part of this rebate under this scheme, and hence making us eligible for refund under the RODTEP scheme. I'll not go into the tariff details on each of the products which are available for refund. All of these details are something which are very specifically covered under this scheme. However, not to miss any part of it where petrol or diesel is something which is a major component which still remains unrefunded even under the GST regime. So it becomes a cost of the product, and whatever the cost that I am incurring will be definitely be refunded if I am doing an export of goods where this cost have been made part of it. Coming down with the other aspect of this return where even fuel which is used for captive consumption have been specifically covered. So whatever excise duty or VAT I am paying on that which is used for manufacture of such goods, the fuel that is being used is available for refund under this scheme. Even the GST, either under central goods and service tax or state goods and service tax, which are purchased from unregistered dealer, however, where there is an embedded GST cost, may be considered and may be made available for refund if specific justification to that export is concerned and taken care of. As I mentioned, in terms of credits or taxes which remain unrefunded are eligible, I will arrive at table 20, para 23, where total accrued ROTAP during the year will be reflected very clearly, and the ROTAP rate which is available, as I mentioned you, either in terms of Appendix 4R or Appendix 4RE, would be eligible for the exporter. So the goods which the taxes which have been borne on that goods needs to be directly being attributed to that goods. There cannot be an indirect nexus. Also, in relation to that direct relation, raw materials which are purchased from unregistered dealer will also be forming part of this. However, as I mentioned you earlier also, any administrative costs which are not directly connected to that product may not be considered and may not be eligible for this ROTEP rebate. Ineligible input tax credit, which is the major concern now, which are getting blocked under 17.5 or 16.2, where I'm not fulfilling the conditions under the GST Act. If they are directly linked to the export, they may be eligible for rebate under this scheme because it forms part of my block credit and I am not specifically been given the credit for it. Coming to the input side of it, friends, where incidence of tax has been borne by the manufacturer who is exporting that goods, and the inputs which are available at a 8-digit level, I may be eligible for rebate under this scheme. And these 8-digit inputs which I have specifically covered should also have raw materials or other inputs which makes total of that exported products cost may be eligible for refund under the scheme. Along with that, whatever inputs that I am claiming to be part of this, I need to make sure that there is quantity and unit of measurement being very specifically covered. Now, total taxes on that raw materials which I procured needs to be mentioned. Also, if there is any other tax which the raw material has paid, has also to be made part of it. So all of this will come to an end where I need to attach some documents in relation to this calculation, either in terms of Excel or PDF, how I have arrived this, along with a declaration that the rebate or claim under this scheme is only with respect to duties which are not exempted, not credited, or not remitted under any other law, and they are being actually incurred by me as a part of a tax bonding person. Now, some various aspects of this annual return I would like to cover briefly before coming to the issues which exporters face while claiming this scheme, or what are that special things which every exporter while claiming needs to make sure. But now we'll discuss some few things about the return which we are required to file. The details are not specifically required to be accurate. Nevertheless, there should be reasonable justification on that calculation which we are making. The workings for this, as we mentioned already, we have to make sure that the records for that RODTEP scheme needs to be maintained for 5 years. Also, if exporter is found that there is no valid basis for that value, the authority may also direct the exporter to refund or surrender any excess RODTEP claim which he has made during this period. Now, let me come to the practical aspect of this RODTEP scheme, where issues and solutions. Let me try to cover few of them which we have seen in practical world which is happening, and how to conquer their issues and what is the best solution for it. Now, when we are into this era of digital mode, where every shipping bill is getting filed through IceGate, Now, in respect of that, the credit is not reflecting to that IceGate ledger. The the dispute may be because I have not made a Y flag, that is yes flag, under the shipping bill, which we discussed earlier. For making eligible under the scheme, I need to make sure that I select that Y intimation into the info code before the LEO is made full and final. So LEO prescribes to be the final approval from the customs which we get. We will need to make sure that before that the intention to claim ROTAP is made very clearly available. The second reason could be where HS codes are not part of the DGFT's Appendix 4R, where Appendix 4R clearly covers the list of goods along with the rate and cap limit, prescribing a particular set of HS codes to be part of this scheme and not all. Also, sometimes this authorized dealer code is not registered or is mismatched at the port of export from where the goods are going outside. So make sure that there is a correlation and matching of AD code with the shipping bill and other aspects on the IceGate portal to make sure that the claim reflects correctly on the IceGate ledger. We have also seen this very frequently where the scrolls are being generated based on the shipping bill filed with the Y flag. However, the credit is not showing on the IceGate ledger. Now, there is a syncing which is required between IEC, GSTN, and AD code so that the incorrect information or linkage is not happening on the IceGate. On the IceGate portals, you can verify by going to user CD code mapping and verify that all the details are matched as per the ports available from where we are exporting the goods. Even if there is some mismatch, we can contact to the jurisdictional customs officer for manual review if the delay in that matching exceeds 30 days, and we need to make sure that the correct credit is reflected in my IceGate ledger. In terms of the roadmap which I claimed and which I received, there is a difference and there is a reduction in the roadmap benefit which I expected and which actually flow to my credit ledger. Maybe there is an issue with respect to FOB value which I mentioned in the shipping bill, and because of which the value under the roadmap scheme has been reduced. Also, we can verify again the rates which are applied under the road type scheme along with the cap so that the correct data and the correct rebate is being flown to us. Also, somewhere if there is a mismatch on product credit category under which our product is exported, there may be some issues in respect of road tab being less availed or less credited to my ledger, where there has to be a review mechanism for each shipping bill which I need to make sure that I have in my internal control so as to make sure that this issue does not arise again. Also, misclassification in terms of HS code. So the classification which I made an actual classification which the product used to have, if there are some mismatches which could lead to no road tap or less road tap being claimed or availed to by me. In terms of export invoicing, which is not matching the notified code, that also something which can be considered to be error and hence will leave me behind with no route tab. As I mentioned, the customs tariff and the appendix 4R needs to be simultaneously seen, and based on my product classification, I should be eligible to claim this rebate under the route tab scheme. Also, internal control, which I mentioned, either in terms of an ERP or an external tooling, which may be adopted so as to make sure that the HS code mapping happens rightly. These are some of the basic aspects, basic issues which the exporters generally face is in terms of delay in scroll generation and transfer, where there is a process lag or system lag which happens. If not generated within 10 days, there is something which creates an issue here. transfer or utilization. One thing in terms of utilization of these e-scripts, I mentioned there are two utilizations which are be made available to the exporters. One, I can use it against the future imports payment of the basic customs duty. I can make it through this script which is generated. Second aspect, I can also transfer to other IEC holder where I can transfer this script which can further be used by that exporter or IC holder for their further imports. But very specifically for that transfer, I need to have a digital signature being updated on my iSgate portal, which sometimes we see have been expired or not updated, and hence you are not liable for transferring that credits. Also, clarity among staff or CHA is somewhere down the line missing, and hence regular training and internal workshops formalizing by way of an SOP is something which is very suggestible and required to be done in terms of making sure that the correct information flows. Last part of it, uh, in terms of manual ports or non-EDI ports, that is electronic data interchange ports. Now, however, now all the ports have been made sure that the EDI systems are placed. However, wherever there is non-EDI ports, this scheme is not eligible as all of this is processed through shipping being bill filed through this iSgate portal. So this was something which I wanted to cover as a part of my presentation today, where one of the schemes which we discussed was this RODTEP scheme. I can say under the Customs Act, there are much more benefits in terms of other schemes, either in terms of duty drawback, advance authorization, EPCG, lot of other schemes which the importers and exporters can take benefit out of and hence value at their clients in terms of this process being followed and hence making sure that the client gets the right value for the services that we give. So I'll like to end my session here. I think so. We are already up by 2 minutes. I will hand it over to Anshul Bhai. If there are any queries, I don't want to take up time of other speaker, which is going to take up very important aspect of CSR. I would like to thank all the organizing committee for having me here and giving me this wonderful opportunity. And if there are any questions or queries with respect to, you can always mail to me, and I'll be glad to answer your all the queries. Uh, Now I hand it over to Anshul Bhai for the remarks.
Thank you, Yashbhai. We have few questions from the listeners, and around 500 audience was there listening and just getting knowledge from this CP webinar. Uh, I will take one by one. One question is from Suman Thakkar ji. If road tape is less than 1 crore, then filing of ARR is not required. Even road tape benefit for single HSN is more than 50 lakhs.
Yes, that is the right what Sir has mentioned, where the first criteria that needs to be seen is the claim should be more than 1 crore. If that is more than 1 crore, then only I need to go into detail on each HSN wise, and hence I will be only liable to file this return if my claim exceeds 1.
Thank you, Yashbhai. And second one is there any expiry date of scripts?
So this script has an expiry date of 1 year from the date of issue. So either you can utilize against future payment of imports within that 1 year, or it may be transferred to other parties. But yes, there is an expiry to the scripts.
We are saying the expiry date is 1 year from date of issue.
Yes.
Whether there is a time limit to issuance of scripts from the date of
So
reports.
So generally, what is the tentative timelines that has been prescribed is 10 days from the date of LEO, that is let export order. Generally, the scripts are being generated on the IceGate portal and you are eligible to use it for further purpose.
One more question is from C. Ananda Kumar sir. Should all 8 digit of HSN codes should be mentioned there.
So this is with respect to, sir, where a specific product bears a 8-digit HS code. So the rates which are made available in Appendix 4 are, if you see, it is all 8-digit, very specific to a product, and hence that mentioning of the correct HSN code while exporting would be required.
We have one more question from Mahesh Giriji from Ludhiana. Will be extended ARR date for further due to 85% have not fulfilled this return?
So very important and relevant question which is being raised by Mahesh ji in terms of this year where this new form or new scheme which has come up of filing of annual return, there are very high chances that this scheme is the filing of these ERR returns get extended, and we as all exporters rightly mentioned by Mahesh ji majorly have not fulfilled this return filing process.
So that's all, Yashbhai. And thank you so much, Yashji, for minutely discussing the basic details of this, the ERA or RODTEP, their returns, and the provisions of foreign trade policies with custom laws. It was a really eye-opener session for all of us. We have described that there are a lot of scope and legal matters ongoing in this matter, and future will be really ours. Thank you, Yashbhai. Now
Thank
going
you, sir.
forward,
Thank you.
we have another session on the one of the again emerging topic, CSR, corporate social responsibilities. We all know about this, the basics about this CSR, but there are a lot of things attached with the CSR reporting and compliances. So for this detailed session, we have CA Charmi Atul Shah with us. She is a fellow chartered accountant with a strong academic and professional background. She has a lot of certifications in BR, SR, peer review, and social auditing. She also held key positions in various ICI committees and co-authored few publications on various topics related to CSR, ethics, and all the things. She had taken also multiple sessions with ICI branches and other also platforms. So we welcome Charmisha, and without waiting time of audience, I would like to hand over mic to Charmisha ma'am for his further deliberation.
Thank you, Anshul sir, for the kind words of introduction. And also thank you, CP committee, for giving me a chance to give my insights on this topic. So, good evening, everyone, and thank you so much for joining us today. I'm truly excited to talk about a topic that is becoming increasingly important across all sectors. So, over the years, I have been first in how impactful socially responsible practices are coming into view. We shall see in this session today. So, today's session is titled as CSR and Overview. And that's exactly what I have planned to provide a clear, accessible look at what CSR is, why it matters, how it's evolving, and what it means for organization, employees, and society at large. So, why are we here? Because to know what is CSR, why CSR matters in today's world, global trends and examples of the companies, how company implements CSR in practice. So with that, let's begin by asking a fundamental question. What exactly is CSR and how did it become such a vital part of modern businesses today? So let's start with knowing what was CSR in pre-CSR era. So right now we are into the CSR era. So let's check out what was pre-CSR era. So this slide is structured into four quadrants, giving a concise historical context leading up to the formalization of CSR in India. So the top left is disparities in economic growth. That is, CSR emerged partly in response to visible gaps in development, rural urban divides, poverty, malnutrition, and poor access to education and healthcare. So, these are the challenges which made it clear that market growth alone wasn't solving deep rooted inequalities. Then comes the right part, practice of corporate giving, that is philanthropy existed well before formal CSR, often through family run trust or endowments. So giving was largely private, unregulated, and often lacked alignment with core business operation. Then comes the left part, a major transformation from charity to strategic CSR aligned with business goals and shared value creation. So the new model views of CSR not just as giving back to the society, but as building inclusive, sustainable business ecosystems. And the last part comes India becomes the first country to mandate CSR via legislation. So this was globally unprecedented, but moving CSR from voluntary to a legal obligation for qualifying companies. What a great move by India in 2013 by introduction of Section 135 in the Companies Act. Now let's look at what are the primary objectives of CSR. The first was to promote innovative ideas, robust management system to address local areas and other needs. So CSR isn't just donation, it's about problem solving. Businesses are encouraged to develop creative, sustainable, and locally relevant solutions like clean energy, digital literacy, or rural education programs. The next objective is sustainable business philosophy. So, since we promote responsible and sustainable business philosophy, CSR helps organization to adopt a value-based approach. This means considering long-term impact over short-term impact gains in environmental policy, labor practices, and supply chains. So it is a balance economic growth with environmental and social well-being. And it also contributes to UN Sustainable Development Goals. The last objective is social and environmental impact. So modern CSR is not optional now. So it's about recognizing your footprints. So companies are expected to actively reduce harm and enhance well-being of the society at large. So whether through reducing emission or supporting underdeserved communities, the companies can adopt CSR. So it also can reduce pollution, emissions, and resource consumption. To have a sustainable business, it can support climate action, biodiversity, and ecological restoration. It also can develop new technologies and practices to address social and environmental changes. It can also enable inclusive solution for underserved population of the society. Now let's look at what is CSR. Uh, Against the section 135 of the Companies Act, let's look at the environment or the impact part of CSR. It is first the responsibility of the enterprises for the impact on society and environment. So modern businesses are no longer judged only by profits. They are expected to contribute positively to the world around them. So the companies should be socially responsible. That is, the enterprises must consider the well being of their employees, customers, communities, and other stakeholders. Also, the business should be environmentally responsible. That is, the companies should actively minimize pollution, conserve resources, and adopt sustainable practices. With social and environmental responsible, the business should also be morally obliged. That is, the CSR should reflect a company's ethical commitment to do the right thing, even when it's not legally required. Legally required means the company doesn't fall under the section 135 of the Companies Act. Then too, it should have an ethical commitment towards the society. For example, a manufacturing firm treating its waste water before discharge to protect local water bodies. This is an ethical commitment by the company that they purify the water before their disposal, so all the chemicals which gets disposed from its factory doesn't mix with the common water body. Then comes the triple bottom line, that is the people, planet, and profit. The triple bottom line framework expands a business success metric beyond just financial performance. So, first, let's look at people. How does CSR affect people? It should affect people like fair labor practices should be adopted by the company. The company should have community support. Health and education programs should be done. Then comes the planet. So, environmental conservation, carbon reduction, sustainable sources are things which make the planet safe by the CSR activities. And last comes the profit. So, all the programs should be economically viable and there should be return on investment. In this way, a balanced growth is only possible when a business positively impacts all three dimensions. And last comes voluntary versus mandatory CSR. So, CSR can either be voluntary choice or a legal requirement depending on national regulations. So, initially, before 2013, voluntary CSR was there where it was practiced and it is common in global market before we had the formal law. But now it is mandatory CSR, like in India, legally required under Section 135 of the Companies Act 2013. It is specific. Now the Companies Act itself says that 2% of the net profit should be expended. So now there is a specific spending threshold and reporting obligation. And also, Section 135 ensures minimum accountability, especially amongst the large corporate. And India is the first country to mandate CSR by law and setting a global precedent. Now, as in India, it is legally applicable, refers to a legal obligation of certain companies to contribute to social and environmental development going beyond just generating profits. So, if any of the criteria in the preceding financial year, like if the company has a net worth of more than or equal to 500 crores, or turnover is more than or equal to 1000 crores, or net profit is more than or equal to 5 crores, then there is a CSR obligation to spend at least 2% of the average net profit of the past 3 financial year on CSR activities. And their preference should be given to local areas where the company operates. Here, they have legally made applicable that the CSR committee must be formed and a committee of a board, more than one independent director should be made, and CSR policy should be formulated by the CSR committee and it should be disclosed in the board's report. Also, CSR reporting is made mandatory in the annual board report, and activities undertaken, amount spent, amount unspent, reason for underspending, everything has to be written in the annual board report. So, what was the purpose that CSR was made applicable in India? It was made applicable because it had to make businesses accountable for social equity and environment protection. It aligned corporate goals with national development objectives, that is the SDGs, and had to create inclusive growth and reduce inequality amongst the society. Now, Schedule 7. This is Schedule 7 uh, of the Companies Act 2013, which is very crucial because it defines and regulates the scope of permissible CSR activities that companies can undertake under CSR law in India. So, Schedule 7 provides a clear list of activities that are considered eligible for CSR spending. Without this guidance, companies might invest in areas that don't legally count as CSR. So it ensures CSR funds are directed towards genuine social development of the society. So this Schedule 7 helps the MCA, auditors, and companies stay aligned in the same page. And it also prevents misuse or misclassification of CSR expenditure. So many Schedule 7 items align with Indians' Sustainable Development Goals, that is SDGs, and public policy needs. So here the focus areas are like education, health, environment, gender equality, sanitation, and gaps it bridges the gap between corporate responsibility and national development. Since the list is public and standardized, stakeholders, that is the investors, media, citizens, can evaluate CSR performance more transparency. So here the Schedule 7 says eradication of hunger and poverty, promotion of education, gender equality, reducing child mortality and improving maternal health, combating AIDS, maternal and other diseases, social business projects, environment sustainable, employment enhancement, vocational skills, and other matters which may be prescribed. Next comes the importance of CSR. First, it builds corporate reputation and brand value because it demonstrates that the company cares about more than just profits. So it enhances public trust, social customer loyalty, and media perception. So the consumers increasingly prefer brands that are socially and environmentally responsible. Second point is it attracts and retains talent. That is, employees want to work for a company with a purpose. The CSR initiative boosts morale, encourage volunteerism, and foster royalties. So, strong CSR culture helps retain top talent in their organization, especially amongst the younger generations. Next comes strengthen community relationship. It strengthens community relationship by engaging in local development. It builds goodwill and the companies become seen as partners in progress rather than just profit makers. So, this helps to reduce local conflicts and earn a social license to operate in the society. And CSR encourages sustainable business practices. That means the company drives company to adopt eco-friendly technologies and processes, and also reduces waste, energy use, and long-term environmental impact. So sustainability is becoming a competitive advantage in global market for all the industries which are operating at the local level in India. Then comes it improves investors' confidence. That is, Ethical and socially responsible firms attracts ESG, that is environmental social governance focused investors. So CSR now is a key metrics in risk management and valuation of their businesses. So good CSR equals to long-term business risk, lower the risk businesses in future. Large firms. So following legal frameworks, it avoids penalties and improves government corporate governance. The CSR compliance is now a part of regulatory and audit and scrutiny for all the businesses. And the last importance is drives innovation and long-term growth. So CSR addresses social problems, often leads to new market opportunities. So doing up good projects in various areas gives the company and enhances their market opportunity in various states and various districts of the country. It also encourages companies to think beyond traditional boundaries. So, for example, low cost health innovations or rural market solutions are developed under CSR. So, initially, no one was able to go into the rural markets, but now, because of CSR, they can pitch the market in the rural sectors also. With this importance in CSR, various companies have a global presence in doing CSR. So, certain companies like Microsoft does various projects, especially in digital literacy programs. So, Microsoft has invested in global education by providing free or subsidized access to technology. Though initiatives like Microsoft to philanthropies and AI for good, it promotes digital inclusion, especially in underserved communities. So basically, Microsoft slogan empowering every person on the planet to achieve more. Now, after their CSR projects, isn't just a slogan, it's backed by their actions. And so this company gains importance in the eyes of investors and customers. Unilever, if we see Unilever, it has a sustainable sources. So Unilever Sustainable Living Plan focuses on responsibly sourcing raw material like tea, palm oil, dairy, etc. So basically, Unilever emphasis on reducing environment impact across its supply chain. It works directly with the farmers to promote ethical and eco-friendly practices. So they aim to decouple growth from environmental impact. Coming on to Tata Group is also spending much on CSR for rural development. So though Tata Trust and CSR arms of Tata Steel, Tata Power, etc., the group focuses on clean drinking water, vocational training, livelihood support in rural India, and strong emphasis on inclusive and community led development. So, a legacy of nation building through business led philanthropy is a live example where Tata Company follows. So, taking the last example for CSR in practice by Coca Cola, Coca Cola focuses on water stewardship, where Coca Cola aims to be water positive, that is, returning more water than it uses in the production. So it works on water consumption, rainwater harvesting, and community watershed projects in India, also globally. So over 100 water replenishment programs and projects are run across India by Coca-Cola. And so this was just the example of 4 companies I have taken right now in practical what they do. But there are various companies who are doing very well in their CSR forte, where they conserve water, technology, rural development, etc. So this makes the other companies which are coming on to the market more responsible towards society and sustainable by as they have set a tone for CSR practices. So these are the statewide CSR spend during financial year 23-24, where Maharashtra tops the CSR expenditure by 2266.14 crores. After Maharashtra, it comes Rajasthan, then Tamil Nadu, then Gujarat and Telangana. So you can see there is unequal spending by all the states. So all the states are not equally doing, or all the industries are not expanding their CSR equally amongst all states of India. So majority of spending is done in Maharashtra, Rajasthan, and Tamil Nadu. This was the statistic from financial year 23-24, and more or the other, when I can see the trend from 2021 to 25, mostly Rajasthan, Maharashtra, Rajasthan, Gujarat are the top states where the CSR by the companies are spent. Here it is, this is a pictorial description of which district are aspirant of getting CSR. So majority of the CSR expenditure are not done in this society, and they need such CSR expenditure to develop or to have rural development or for underprivileged people. Like the state number is also printed for first, second. So not go into much intricacy, but just a pictorial view that most of the Maharashtra is covered, most of the Rajasthan is covered. Only the left corner of Rajasthan is not covered by the CSR expenditure. Most of the Gujarat is covered, Madhya Pradesh, and mostly Telangana, Chhattisgarh area, Jharkhand area is deprived of CSR expenditure by the company. So here you can see that where is India's industry CSR money going? The CSR investment on the left hand side and average GDP per capita at down. So you can see poverty rate in India. It's returned mostly in green. So poverty area is coming on the left side of India, moving on to the right. And this is just a statistic which is taken from Satwa Consultancy. So as we have already seen water schedule 7 points. So this is sector wise bifurcation of uh, which sector of the schedule 7 gets more expenditure by the CSR. For example, first is education and differently abled and livelihood. So most of the CSR, so in from total CSR expenditure in total country of India, 37% goes to the education part. Then comes health and eradicating poverty and malnutrition. 29% of the expenditure is made in this sector. Then comes rural development, where 10% is bifurcated. And you can see the least was to technology incubators and benefits to armed forces. So there is 0% amount bifurcated to this sector. Also, slum area development, there is 0% of expenditure done. That is 4% to Prime Minister National Relief Fund, and also the least we can say is like 1% to encouraging sports and heritage art and culture. So if anyone wants to plan their CSR policy or CSR expenditure, we should now focus on developing the underdeveloped sector, that is the technology, slum areas, encouraging sports, etc. Because mostly now 37% of the funds are allocated to education and differently abled and livelihood. These are the SDGs with our Schedule 7 countries. Like, for example, we go to activity 1, that is healthcare and eliminating poverty, sanitation, and clean water. We have SDGs relating to each of the activities. So, we have 8 activities with the SDGs connected to each other. So, education vocational is also there with the SDGs. So, this is the combination of our 8 activities with the SDGs. Since there is an unequal bifurcation of CSR in various sectors, various state of the country, what can be the reason for it? The only reason would be there are various challenges which are done or challenges faced by the country in CSR implementation. What is that implication? First, lack of clear strategy or vision. That is, many companies treat CSR as compliance checkbox rather than strategic initiatives. And also, CSR is only driven by purpose and not just obligation. So there is also poor execution and monitoring. So project often suffer due to weak implementation partners, inadequate monitoring, evaluation, lack of impact measurement, etc. So there is poor execution. Also, there is limited community involvement. So projects are sometimes designed without involving target beneficiary, leading to low acceptance of the projects in the area and irrelevance of the interpretation. Budget utilization. Companies rush to spend the required 2% of CSR fund within the financial year, leading to hasty decisions and low quality or unsustainable projects. There are also short term focuses like lack of long term commitment to causes. Project may stop once budget is over, or it needs more attention which is not given to the project. And also, sustainable impact requires a consistent engagement over years by years. So, majority of the companies cannot give a sustainable. Then comes inequality in fund allocation. So high focuses on popular sector like education, health is given, which we have already discussed, while other equally important areas like mental health, art, culture receive less attention. Then comes regulatory complexity, frequent amendments, detailed reporting format, and scrutiny from the Ministry of Corporate Affairs can confuse smaller businesses or new entrants. So they are reluctant to offer their CSR in the society. Then comes greenwashing and PR focus. So some companies use CSR as their branding tool rather than a genuine development initiatives. So this gives a greenwash, like looks good in reports but lacks in real social impact. And the last thing is budgeting and compliance pressure. So since there is much compliance going on through after the change in the amendment policies, some companies are reluctant to have their CSR activities. So there are various changes, like CSR was first time introduced as a statutory obligation for the companies by the way of Corporate Companies Act 13 under Section 135. So thereafter, the company's rules were notified on 27th Feb 14 to lay down the specification and procedures to be followed by the company while discharging their CSR obligations. So the Companies Amendment Act 2019 and 2020 resulted in major changes in CSR provisions under Section 135 of the Companies Act to provide for notified changes. MCA had released a draft rules that were called in March 2020, inviting public comments. So recently, in 22nd January 2021, the MCA finally issued the company's amendment rules, giving effect to changes introduced in CSR by the CSR Amendment Act 2019 and 2020. So the provision shall affect this provisions and the Amendment Act affects the CSR projects or program approved prior to 1/4/21. So this doesn't affect any project which are going on from before 1/4/21. This Amendment Act comes after 1/4/21. So what were the changes made? There was a change in CSR definition. So definition excluded a list of activities like activities pursuant to normal course of business of the company, or any activity undertaken by the company outside India shall not be considered as CSR, for except training of Indian sports personnel representing any state or union territory at national, international level. Then it also excluded activities of contribution to any amount directly or indirectly any political party or activity benefiting employees of their own company. Also, it excluded activities supported by the companies on sponsorship basis for deriving marketing benefit for its own products or services. Then comes shift from directional to mandatory. We have already discussed it. Then comes registration requirement for implementing partners with the NCA. So now every NGO or the implementing partners has to register themselves by doing CSR Form 1, and a registration number would be received by them, and without that registration number, no NGO or Section 8 company or or the implementing partner cannot do with the CSR activity for any of the company. Then comes increased rigor for internal control. It might be a kind of new terminology for people working in CSR domain space. But some of the things that are said brings this kind of foray, like the board has to satisfy that CSR fund is used for the purpose and manner approved by it. So internal control, the team, the CFO has to is the responsible person for financial management to certify CS fund utilized for the manner and purpose approved by the board. So now the complete audit and everything would be carried out by the department itself, as the CFO is responsible. Then comes the focus on impact creation, that is impact assessment. Now impact assessment has become mandated, and the impact assessment expenditure limit is 5% of the mandated CSR or 5 million, whichever is less. So three things that needs to be checked is companies with average CSR obligation of 10 crore or more in immediate preceding financial year shall take impact assessment through independent agency. An impact assessment is to be taken for CSR projects with 1 crore or more, and Assessment has to be undertaken for project completed not less than 1 year before undertaking the impact study. The next terminology that has changed in CSR rules is ongoing project. So, ongoing project means that before that, this concept was not there, but after the amendment, it says that it means a multi year project undertaken by a company in fulfillment of its CSR obligation, and its maximum allowed duration is 4 years. That is 3 years, excluding the year of commencement as mentioned in the new rules. So the definition also includes projects that were initially not approved as multi-year but are later extended beyond 1 year by the board on reasonable justification. Then comes administration overhead. It is a new terminology. Before that, we used to use general management and administration word in relation to CSR functions. So, what does administration overhead include? Implementation, monitoring expenses, evaluation of a particular project, etc. So, here, a new rules the companies carrying out impact assessment have been allowed to claim 5% of the CSR expenditure of 50 lakh, whichever is less as CSR expenditure. So the upper limit of 10% for administration overhead has been undertaken by the company which is undertaking impact assessment. The last second comes international organization. So the high level committee headed by NGT Srinivasan had recommended the introduction of international organization in India's CSR region that allowed to take up international organization in designing, monitoring, and evaluating their CSR projects and in assisting them with capacity building of their personnel under the new rules, Rule 4.3. So now you can take help of international organization as the implementing agency also. The last comes the penalty clause. Before that, there were no penalty, but in case of a company, if it fails to disclose unspent amount in annual report on CSR or transfer unspent amount into funds specified under Schedule 7 or transfer unspent amount relating to ongoing project into unspent CSR account within specified time, or if it fails to transfer amount remaining utilized in the unspent CSR account after 3 years into funds specified into Schedule 7 within specified time, the company in default shall be liable to a penalty of lower of the following amount: twice the amount required to be transferred by the company to the fund specified in Schedule 7, unspent corporate social account 1 crore, whichever is less. And in case any officer of the company is in default, it shall be liable for a penalty of 1/10 of the amount required to be transferred by the company, or whichever is less. So let's, before going ahead to the auditing part, we and in case the entire amount is not spent, in case of ongoing project, it should be deposited in unspent CSR account. And if it is not ongoing project, it should be transferred within 6 months from the end of the financial year to the government funds notified in Schedule 7. And if within 30 days you have transferred and after usage of 3 years, still there is an unspent amount, then it has to be transferred to the government funds. Recognition and measurement. In case there is accounting, what would be the treatment in case the CSR is expended by itself by the company, or it is spent, amount is spent, or it is contributed to the fund directly or through registered entity, it should have been charged to statement of P&L itself. Then comes the auditing part. Requirement of audit of CSR activity seems not to be mandatory as per Companies Act 13, but however, due to the provisions of the company's rules, there were changes in the rule 4, 5, and 6, which required monitoring and reporting mechanism of CSR activity, which gives a push to the mandatory auditing of the CSR activities. And what does the role of auditors come? What is the responsibility of auditors in case of CSR? There are two things. First, in case where the company undertakes CSR activity by itself, and second, it comes where the company undertakes CSR activity through a third party, which is eligible Section 8 company, registered trust, registered society. The company should obtain an independent practitioner report on utilization of such CSR. So first, let's look on to what is the responsibility of the auditor when the company undertakes CSR activity by itself. So the auditor should check whether the activity or project undertaken within the purview of Schedule 7 of the Act or not. Whether it has compliant relevant standards of auditing like SA 250 or 720, which is revised for CSR spend. The auditor should check whether not mere contribution is done, and if done, it is done as per Schedule 7. The auditor should also check that there is a separate disclosure of expenditure of CSR activities, and also expenditure on project is incurred as per CSR rules. Then let's look at onto the second part where auditors of the third party see in practice of the third party before issuing the independence report. So before independence report is given, the third party should check whether the amount spent by the funds on CSR activity is as per 135 of the Companies Act, which is also read with Schedule 7 of the Act, whether there is verification of CSR spend as per guidance note on audit of expenses, which is issued by the ICA. Then the auditors should also check that the utilization of CSR funds report is issued in accordance with the guidance note of reports of certificates for special purpose issued by the ICA. So as we all know, the government is providing various relief measures and relaxation in order to boost businesses and economy. In the same context, the MCA had postponed the applicability of the company's CARO 2020 from financial year 1920 to 2021. So now MCA by order dated 17/12/2020 has changed the applicability of date of CARO 2020 to the financial year commencing on or after 1st April 2020. So the CARO will be applicable from financial year 21-22, and CARO 16 will continue to be applicable for financial year 2021 only. So the CARO is the list of reporting requirement that is needed from the auditors who audit a business or a company. So MCA had issued CARO to enhance the scope of audit, and the MCA, in consultation with the National Financial Reporting Authority, that is the NAFRA, released CARO 2020. So it lists out the subject matters on which the applicable companies are mandatory to require to report. So why are we discussing about Caro? Because there were no alteration in applicability of Caro 2020, but it comprises of overall 21 clauses against 16 clauses in 2016. 7 new clauses were entered, and one clause was merged with other, and one was deleted. So, what was the amendment made? Amendment made was in clause 20, where reporting on CSR compliance was made. The reporting on some CSR compliance was as per section 135.5 and 135.6, where unspent amount has to be transferred to within 30 days or 6 months, depending on the ongoing and the not ongoing project. So coming on to Schedule 3, also due to the changes and amendment which were made in the Companies Act or the Companies Act 2013, this was made change. And Schedule 3 included things which are very important to be displayed as per CSR activities. What was that amendment made? Like where the company was covered under Section 135 of the Companies Act, the following shall be disclosed with regards to CSR activity. First, amount required to be spent by the company during the year, amount of expenditure incurred, shortfall at the end of the year, total of previous year shortfall, reason for shortfall, nature of CSR activities, details of the related party transactions, and where a provision is made with respect to the liability incurred by entering into contractual obligation, the movements of the provision during the year should be shown separately. So each and every amount which is unspent, not unspent, shortfall, excess, everything has to be given in Schedule 3 as well as in CARO, as well as in the annual report, board's report. So CSR has gained much of the importance due to this amendment of the Act. So reporting purposes, as how to present and disclose CSR expenditure in the financial statement, that is the reporting expenditure. So unless CSR reporting was standardized, it was not possible to provide stakeholders with confidence and that the underlying CSR disclosure are both reliable and comparable. The CSR reporting standards should be done, and since there are standardized disclosure requirement of CSR, the CSR amount, CSR unspent, reasons are disclosed in cash flow statement, financial statements like board of directors report, notes to accounts, etc. So I welcome our chairman Satish sir. Thank you sir for your presence.
10 मिनट करता हूँ सर.
So before we end the session, I just wanted to show you one of the reporting formats. Since we have 2-3 minutes more, I can show you the reporting requirements which are very important for disclosure purposes.
What happened, Charmi? Technical issue?
No, sir. I'm just sharing my screen, so it may take 2 or
Okay,
3.
okay.
So I can, this is the annual report of HUL, where you can see various CSR activities is showcased in brief. And so I have just taken a live example so you can understand how the presentation is to be made in the annual report itself. So if we directly go, see here they have written that HUL has getting awarded for CSR activities. So HUL projects are given. So HUL projects are given uh, awards for CSR projects. So they have also showcased what awards they have bagged in their CSR activities. So HUF honored with prestigious Doing Good for Bhara Awards 2024 in the category of Doing Good for Jal. So etc. They have also shown every activities which they have done to have a good idea in the eyes of their stakeholders. Then comes here, they have also written key responsibility of committee, audit committees, CSR committees. So here they have given what is CSR responsible for. They have written their policy where 100% there is an independent directors. Then we go to the next thing where they have given various projects which they have undertaken and various SDGs that they have followed during following their CSR activities. What is their scope of emission, deforestation, etc. So this is the annual report which every company has to show on their CSR, where this is the draft format, one brief outline where they have to give their CSR policies, their policy statements, which SDGs they follow, etc. Just this is the brief format in which every company has to give their annual report, and finally it has to be signed. Here the amount has to be returned like average net profit, 2% of the average profit which they have shared, etc. Unspent amount, spent amount, and at last they have to be undersigned. So this way they have to give each and every annual reporting in their board's report. Also, we can see BRSR reporting also in this, but I don't want to take much of the time right now because we have already passed 6. So we can, if you can download any of the annual report of any company from the website where you can see BRSR reporting, which gives CSR requirements, also committee report, notes to accounts also show various CSR activities, various activities which are done by the company, amount spent, not spent. So here, see, you can see that there is no CSR. This is notes to accounts. You can see that there is no CSR activity expended relating to ongoing projects designated as unspent corporate. So every detailing in notes to accounts has to be done by
She's again in, sir. लगता है कुछ network issue is there.
Okay. So topic is pending ना?
हाँ, that's what.
एक बार let Charmi, please continue.
I was sharing my annual report, and I just went out due to the technical glitches. So I was showing note 20 also. This is notes to accounts. So notes to accounts point 20 also showcase that no corporate responsibility expenses have been given. Also, there are many places in notes to accounts where you can see that CSR expenditure is done. So, for example, yeah, this is notes to accounts point 33, where you can see details of CSR as prescribed under Section 135 of the Companies Act. So, amount required to be spent by the company during the year, that is 250, and last year 24 it was 231. Then amount approved by the board was 257 and 235 respectively. And then amount spent during the year is given, and also reasons for shortfall. But since the company has already spent the total amount, there cannot be any reasons for shortfall, and so it is written not applicable. Also, point 7, 8, 9, 10 also shows various reasons where CSR expenditure is done for promoting education. CSR activities done for promoting education, employment, enhancing vocational skill, etc. So also here they have written that it is a subsidiary of HUL Foundation. So each and every small uh, activities or the amount which is spent is to be written in various parts of the annual report, financial statements, like notes to accounts. We have 2 points 21 and 33 where we have to write CSR expenditure. Then again we can go up to uh, yes, here you can see CSR expenditures also here. Refer point 40B, where you have seen that there is no CSR expenditure relating to ongoing projects, and the same was transferred to a special account designated as unspent corporate social responsibility for the financial year within 30 days from the end of financial year. Here also they have written this point A, where the details of CSR is prescribed again. And also in BRSR reporting also, CSR expenditure has to be shown. Like for example, we go to BRSR. This is the BRSR report where you have to write CSR details. What activity was done? What was the turnover? What was the net worth of the company? So in this fashion, CSR amount has to be expended, or the auditors has to check whether each and every amount is properly disclosed in the annual report of the company. And as the stakeholders side, you can check out whether the CSR is properly done by the company and create brand for that company and use it for your own benefit. So this comes to the end of my presentation. So thank you, Chairman Sir and CP Committee for giving me the opportunity to present my views on CSR. Over to you, Anshul.
Thank you, Charmi. As I'm looking at the data, more than 20,000 crores rupees was expended in last financial year by corporates, and to companies which were to whom the CSR is applicable, 98% company has fulfilled their obligation. So the things are going very vast in upcoming years for CSR. There are few question answers from the audience. So before going for the question answers, I would like to invite the chairman CP committee.
Anshul, can we take the question answer? Kitne question answer hai? We can take those first.
7 question answers are there.
Let them complete.
Okay, sir. So, Charmi, before going first, the first question is right CSR for NAPS trainees. I think National Apprenticeship Promotion Scheme. Is it required to obtain an approval of the CSR committee before implementing the same?
Uh, for every of the activity that has to be undertaken by the CSR committee, the CSR committee has to go with section 135, which goes with schedule 7. It should read with schedule
मैसेज डाल देना इसको डालूं दीपक सर
ना करेंगे Okay, so am I audible?
या फोन म्यूट कर दीजिए. IT team, please.
So
Yes,
before each and every activities that has to be undertaken by the CSR committee, it has to take a board's approval, and it should have gone through section 135 with schedule 7, and also it should go with the policy. Once the CSR committee formulates its policy, it undertakes a project which is in line with its own policy, and the board's approval has to be taken for each and everything. So before implementation or before going on through the process, it has to take the committee's approval itself.
thank you. The next question is: a building is constructed with a view to provide social service like medical, flooding, pollution control, etc., etc. The question is: the construction of a building can be part of a CSR for a corporate?
Yes, of course, because initially capital assets were not under CSR purview, but the construction of building can be a part of CSR activities, but it depends on the purpose and beneficiaries of the constructions. So the eligibility would be benefiting the community. It should address a social need, and it should be capitalized in the books of the company itself for the period and gives benefit to the society. For example, you can construct schools, hospitals for the beneficiaries, or a community center where you can give your CSR activities, or so it has a good social impact on the society. So it should not be for commercial purposes or for the company's own use. And also it should also the capital asset should be created for any activity which has a alignment with CSR objectives. It should be compliant with the regulation and give a benefit to the community at large.
Okay. One more question is from Vishnuji, is from UAE. How can companies could ensure that their CSR initiatives are effective?
Uh, for effectiveness, you can go for social impact assessments. Since impact assessment has become mandatory for certain companies, you can undergo, if you are not compliant or you are not legally obliged to do impact assessment, then also you can do impact assessment of the society or the project. Each project can also undergo impact assessment process, or you can take at the year at large. At the end, you can get how many you can have a social impact, like how many people were impacted, how many societies were impacted, or what it has in the future effects in the future because of their project. They can undertake in their impact assessment policies.
The last question: whether the CSR is applicable on a project office of a foreign company.
uh, it has project finance includes
Finance. It's a project office of a foreign company is established in India. Whether CSR is applicable to them or not.
It should undergo section 381 of the Companies Act. It should check whether it falls under the purview of section 380, and if it undergoes 380, then CSR is applicable, or else it is not applicable.
Thank you, Charmi. It's all for the questions, and thank you for your detailed briefing. Even after the time has been spared, But your briefing skills, that around 600 people are sitting there on screen and is watching our session. Thank you. Now I'd like to invite the CP chairman, my mentor, Sri Satish Gupta sir, who is leading three important committees of ICA this year. One is the CP committee. He is also a chairman of UDN director and he is vice chairman of CMP committee, committee for members in practice. I am after qualification of my CA from last 15 years. I am looking at him. Just looking at him, he's working day and night for the upgradation of the profession. So over to you, Satish sir. Please have give.
Thank you, Anshul. Thanks a lot. And I think you, nobody can introduce me better than you because you are very, very close to me. And Charmi, I know her since 4 5 years, and she has been developed like a very good speaker on this corporate social responsibility and other company law matters. And yes, Shah, who has perhaps gone after his deliberations, Tiwari ji, CP committee team, and the tech team, and my dear friends who in a very large number attending this webinar again. Welcome is not a right word as of now. Thank you very much for attending this webinar. And I'm sorry that I could not join you at 4 p.m., but because I was in the flight and that could not have been possible, that was suddenly made a program. So I could not join you at 4 p.m. So, friends, not too much talk, but I would like to share something about the CP, something about the UDIN, and something about the CMP. About CP, as I have already told, I think some of you must have heard that we are focusing on the quality as well as the availability of the programs. And to ensure this, we have taken various steps. I would request you, each one of you, kindly register yourself for the faculty if you want to speak on any topic of any subject, so we can have a very good faculty bank for the benefit of our members, and it would be beneficial to you also, giving you an opportunity to showcase your potential to the members at large. Secondly, if you belong to a town or a small city and there is no branch, there is no CP chapter, and there is a eligibility, to kindly write a mail to the CP committee for establishing a CP chapter or CP group or CP circle. I think our committee under the secretaryship of Tiwari ji is working very hard, and we ensure you that our committee will revert you soon, and we would like to complete that procedure within a month time through request from you. And friends, one more thing which we are bringing this year onward, that we are working very hard that how can we ensure that the CP credit is available only on real time attendance basis. So our software vendors are working a lot, that is TCS, and I think by the end of September, we would be in position to implement that our dream project of this year, that after 20 years of CP credit initiation, we after 20 years we are in the position to make it compulsory for all the members that they get the credit only on real time attendance basis. I was reading a news, friend, today in the paper that UK in Britain, they have allowed the 16 years of age for the voting, and we are 20 years old. As far as CP credit scheme is concerned, I think we are much matured now, and we should agree to the initiative of the CP committee that now onwards we will get the credit only when we attend the program. It is about CP, friends. Another thing which I would like to talk about the UDIN. UDIN, we are coming up with two very good changes. Very good changes. First, we are restricting the member, he or she cannot generate any UDIN for 61st tax audit. This decision has been finalized by the council and in the implementation stage, and I hope that soon we will implement it. To, if not from this year, it will be effective from the next year definitely, and it would be very beneficial for our members at large, and it would definitely be a very big opportunity for the young chartered accountants. Second thing which we have done in the union, that sometimes you are not in position to know the name of succeeding auditor, especially in case of tax audit where the succeeding auditor has not intimated to the previous auditor about his appointment. And so there are several things which remain pending, like if any fees is unpaid, if any technical issue which the uh, preceding auditor wants to share with the succeeding auditor, it is not possible without knowing the name of the succeeding auditor. So in the UDIN, we have made it compulsory that if you want to know the name of succeeding auditor in case of any audit, tax audit, you can contact with the UDIN directorate. They will tell you the name of the succeeding auditor. I think you would love this initiation of the UDIN committee. We are working on several other things, but I think it is not right time to talk. As far as the CMP committee is concerned, I would like to tell you the CMP committee has launched the very good course, the GST litigation, and surprising to all and surprising to me also, 5 courses have been booked starting from the 1st of August and 25th of July, and I think registrations members are getting registered despite having a big fees of 10,000 plus GST. And I can assure you, that after attending this 6 days workshop, you will definitely be in position to contest the GST litigation on behalf of your client yourself. You will not see towards the senior chartered accountants for this purpose. And friends, in CMP committee, if you are aware that when I was the chairman CMP committee in 2020, we brought several things, several initiations for our members and students also. Members both in practice and the job. We are working very hard on several other benefits for our members. It is in regard to credit card, debit cards, CASA accounts, loan account, or rather insurance, term insurance, health insurance, uh, professional indemnity insurance, personal accident insurance, and several other softwares very useful for you, each one of you. We are working in depth, in detail, and I think within a month of time, you would be in position to know several initiatives of the CMP committee of the ICI, which will definitely bring the smiles on your faces. So with this, friends, there are several things to talk about, but it is already 6:22, and we invited you for 4 to 6 p.m. only. So I would not take much of your time, but I would like to thank again each one of you, and I would like to thank Charmi. I would like to thank Anshul, Tiwadi and Yash for giving their important time, valuable time for the benefit of professional fraternity. So thank you very much. Thanks a lot. See you again on next Wednesday. Don't forget to attend the webinars which are being arranged by the committee on Wednesday and Friday, always 4 to 6 p.m. And I want to share one more info. These are the unstructured CP learning program, but you will get the credit of these unstructured learning by the committee only. You need not to fill all these things at your desktop or the system. So with this, friend, thank you very much. Thanks a lot. All the best for the future. Thanks a lot. See you again. See you again, Charmi, Ansul,
Thank
and
you, sir.
Tiwari. All the best.
Sir, thank you so much. And thank you to CP committee for giving me this opportunity to moderate this session. Thanks to support staff who arranged all these type of webinars who can help the members. So thank you all. Just sign off to
Over to tech team.
Thank you so much. Now you may close. Bye.